Well, it's time for our special segment, Quarter Se Quarter Tak, where we bring you expectations from each sector. Today, we turn the spotlight on the pharma pack. Ekta joins us to help us out with what are the expectations. Ekta, take it away.
Thanks for that. Well, for pharmaceutical stocks as well as healthcare stocks, expect a steady quarter. Now, for pharma companies, you are expecting around a 10 to 11% growth in revenue and a growth in EBITDA, which would be similar this quarter, along with profit between 5 to 10%. Now, expect the US growth for generic companies estimated at around 3 to 4% Q-on-Q. Growth X of Revlimid generic would be something to watch out for. Now, overall growth in the US would be led by stability in US generic pricing, volume growth in existing products, and a pickup in recent launches. Expect lower Q-on-Q sales in Revlimid generic for companies such as Aurobindo, Cipla, Dr. Reddy's, Sun Pharma, according to analysts, as price pressure increases. Now, for Sun, watch for the specialty portfolio growth. That would be the key thing to watch out for. For Biocon, watch for growth in the biosimilars portfolio. Now, the range for domestic growth is wide, anywhere between 8 to even 16%, according to some analysts. Now, domestic-focused firms such as Torrent, Ipca, Alchem expected to see good growth this quarter. And watch for commentary on Torrent's acquisition of JB Chemicals. Now, most API companies are likely to see a volume uptick this time round with an estimated 8 to 9% growth year on year. Expect over 15% growth in some CRDMO companies driven by the likes of Bluejet, Divi's, Laurus Labs, Sai Life Sciences. While Syngene and Piramal Pharma could probably see a muted quarter due to inventory destocking on key molecules. Now, moving on from pharmaceuticals to the healthcare front. On the healthcare front, expect around a 20% growth in EBITDA, driven by over around 20% growth in hospitals and around 10 to 11% growth in diagnostics as healthcare companies recover after a softer Q4. Apollo hospitals might see continued impact of international patients slowing from the likes of Bangladesh. Commentary on the recent restructuring will be watched. Expect steady margins for the likes of Dr. Lal's. Watch for recent acquisition integration for Metropolis, which has been on an inorganic drive. Now, let's leave you with the valuations. First, for the pharma stocks, as you can see, Sun Pharma ruling the roost, most expensive, along with a couple of others such as Divi's Labs. So a lot of probably the good news is factored in. For diagnostics, Dr. Lal's as well as Metropolis, FY26 PE stands at around 50 odd times. And finally, for hospitals, the likes of Apollo Hospitals and Max ruling the roost in terms of valuations there.
Okay, all right, got it. Ekta, thanks very much for prepping us up with the pharma and healthcare report card. Let's take this forward with Param Desai, who tracks the sector at Prabhudas Lilladher. Param, great to have you on. So what's your sense? I mean, hospital stocks anyway have been doing really well. But if we talk about pharma, with so much going on and still this sword hanging in terms of what the eventual US policy is going to be with respect to import of generic medicines, let's start right there. I mean, in terms of just pure earnings growth, best-in-class earnings growth, which company will deliver in the first quarter?
Hi. Overall, if you see US, the growth will be slightly on a softer side. The base is on a higher side, given the Revlimid. And we are seeing most of the companies Revlimid, there is an erosion on a Q1Q basis. So on a large cap side, whoever's having a higher Revlimid exposure will have a slightly flattish growth in the US from a YY perspective. Having said that, I think domestic pharma will be a pretty steady quarter. For most of the guys, the growth will be in the range of 8 to say around 13% among our coverage universe. The acute season has also been started pretty well. So slightly acute heavy companies like Alchem, Ipca, Mankind should do well during the quarter on a YY. But net is the US which is basically keeping the growth slightly muted on the pharma side.
So I take your point on Revlimid, and that's where that high base will come and play a part. But X of Revlimid, overall, when you talk about US business volumes, then what's the picture like? And from large cap pharma perspective, again, I go back to the growth question, which company could deliver the best in class growth?
Yeah. So from an X of Revlimid, the base business I think should be a steady. There should be some price erosion, specific product specific price erosion will be there depending upon the competition. But overall, I think the price erosion continues to in a mid single digit. So we expect the base business X of Revlimid to grow on a YOY basis. Among our coverage unions, from a Q1 perspective, I think Lupin will see a highest growth YOY, largely aided by one of the product called Tolapatin, where they have an exclusivity. Barring, I think, Lupin among our coverage, the growth largely among the large caps is largely a flattish on a YOY basis.
Okay, so that's as far as growth is concerned. Just run us through some of your favorite top picks and why, and also throw in that margin perspective. I mean, we've discussed growth. From a steady margin to maybe even a growth in EBITDA margins, is there anyone to watch out for in Q1?
Yeah, so margins largely will be pretty much steady. If you see the raw material prices continues to be pretty benign. So gross margins will continue to remain healthy for most of the guys. Yes, there could be some kind of margin erosion because of kind of a Revlimid-led erosion. Otherwise, margins are expected to remain pretty much steady across the majority of the companies. With respect to our top picks, we prefer on the pharma side, we prefer Sun, Lupin, among the large caps and DVs and Eris. These are the preferred names in the large and the mid cap names. So Sun, clearly, I think the story on the specialty side, we are structurally very positive on that space. I think they have interesting pipeline to go out. Two launches lined up in this year, and beyond 26 also they have some good pipeline to play. So specialty is a segment which will drive in case of Sun. They have a less dependency on the US generic. So that is clearly a preferred pick among the large cap names. Followed by Lupin, which has a zero Revlimid exposure, and they do have an interesting US pipeline with a couple of products on exclusivity side this year. And beyond FY26 also, they have some couple of niche launches in the US, which will drive their overall growth story beyond 26 also. So these are the two names among the large cap. And in the mid cap, we like Eris. It's a pure 85-90% domestic play story. Some of the inorganic initiatives what they have taken last year, I think that has been shaping up pretty well. And there is also a GLP story which will come into play in case of Eris from 27 onwards. So I think we almost see PAT getting double in the next 2.5 years in case of Eris. So this is one of the name which look in the mid cap name.
So Sun Pharma, Lupin and Eris. Sun, yeah, there was some positive news, the news flow on their Illumia drug as well in the next phase of trials, I believe. Very quickly, Param, finally, hospitals. Apollo Hospital has been a dream stock for many in the market. I think it's still your top pick, but, do you like anything else? And again, from an investment perspective, should more money go to hospitals, pharma, split it up? Just quick final take.
Sure. So we have structured very positive on the hospital space. I think even this quarter, if you see the growth is around 18 to 20% EBITDA growth. So another quarter where the growth remains pretty much steady. So we prefer hospitals over pharma, given the kind of growth profile. And the important thing is next 3 to 4 year journey in the hospital is largely aided by the bed expansion. Most of the guys are almost doubling the bed in the next 4 to 5 years. And this expansion is largely coming function of brownfield, inorganic and greenfield. So that will not drag the P&L, which was the case in the last capex cycle. So we remain structurally very positive. We see around 18 to 20% of EBITDA growth story to continue in the hospital space. And among our preferred picks in the Apollo, KIMS, Jupiter, these are the preferred names in the hospital space.
Apollo, KIMS and Jupiter. Thank you very much. Good speaking with you there and getting that perspective, Param. So that is the sort of healthcare and pharma space on the back of the earnings which are expected from the space. Let's talk about markets which are now absolutely, they've gone back to being flat on the Nifty.